Hey everybody, Jeff Sutherland and Chase Waldron with eXp Realty, and we're focusing on 2026. This is our market report. We're going to be talking about what happened in June and what happened in the middle of July or at the beginning of July. Chase, I'm excited to be here with you today.
Me too, man. A lot of fun things to talk about today.
Yeah, we're going to get after it. So let's get right into this, and I'm going to share the first slide, which is accepted contracts. Accepted contracts in 2026, also compared to other years, you can see a very seasonal, repetitive model here of what usually happens in Phoenix, Arizona. I'm talking about Pinal and Maricopa County. We had a little bit of a uptick here, almost 16% right after Memorial Day. That was great. But then since then, it's gone down. A lot of that is probably due to the rates because we've had a recent rate increase. So less applications for mortgages are being written, thus lower contracts. Not to mention, it's been really hot here. It's been really hot, and a
No
lot of
doubt.
people just don't like to move in the summer.
And that's the thing, and to really take a look and see that it really is still following that seasonal trend. A lot of the accepted contracts happen, at a higher rate during those first few months of the year, and then when it starts to get hot, it kind of falls. It ticks back up again when it starts to cool off, and then dive bombs at the holidays. So it's still following that seasonal trend that we see every year.
Yeah, and no matter how hot it gets, you're still out there doing open houses, right? Because nobody's going to
Every
outwork you.
weekend, man. Every weekend.
He's out there sweating. In
Got to
fact,
be out there.
he takes two pairs of shirts before his open houses.
Yeah, you got to this time of year.
Okay, so mortgage rates. This is telling you that part of the reason what's going on here. Look at this. We were even down in February to under six, and then it's been ticking up. It's been
Yeah.
ticking up to
6.75. Yeah, we've been checking it every single day. It popped down below six for a half of a second. Everybody got excited and then it started going back up again. So right around, 6.6, 6.7. We're still seeing some of the new builds. We talk about it a lot on here. These new build communities that are still, some of them are buying these interest rates down to the 3.99, 4.99 range, 30-year fix. So there are still options out there in that space, but the market rates are still you know, higher
yeah.
higher than what we'd hope to see.
Yep,
But
yep. It affects affordability every time it ticks up like this. Now, I want you guys to see this chart. Now, a lot of people, especially real estate agents that have been in the business for years and years, during 20 and 21, particularly 21, everybody was making money. I mean, everybody that was in real estate was pretty much making money, but I keep telling people that really wasn't reality. Okay, we had very low rates. I mean, under three, people were getting deals for under 3%, and we had trillions of dollars injected into the economy, right? So you had this big spike during COVID up here, and we were closing 105, thousand homes per year. Okay. So then you have the downturn, right? Because the rates are going up, the sales are going down, right? And then you hit this flat bottom, which is essentially what our data is going to show you today. Since about the mid 2023 timeframe, the market's been pretty flat. It's gone up maybe 3%, since then. And you can see the little uptick here. But right now we're doing like 70,000 sales a year. That's what it's trending to do in 2026. That's about 70% of what's the peak, but it's really kind of the normal. When you look back here at 2015, you're looking at 75,000 homes.
yeah,
That was a normal market. So now we have a normal market. If you notice another thing on this chart, friends, if you see the orange and the light blue, those are short sales and bank-owned property. People are always telling me, "Oh, aren't we going to be hit with a lot of, bank-owned property and foreclosures?" Not so much, because you can see that's just a sliver of the sales, because if somebody has to sell right now and they're underwater, it's probably because they bought the house in the last year or two.
yeah.
Okay. And that's going to happen. But if you bought your house, 3, 4, 5 years ago, chances are, you're in pretty good shape. So you don't have to foreclose your house.
Right. They still have a lot of equity. A lot of people still have a lot of equity in their homes
Yeah.
if they bought before then.
The moral of the story in this slide is that people are still selling their houses, right? And they're doing it because of events. They have a newborn, perhaps they're empty nesters like myself, and they're thinking about downsizing, or maybe there's a divorce or a death in the family. There's all kinds of different reasons why people have to make moves. And everybody's always asking us, should we wait? Should we wait? Well, we're going to get in a little bit about that in a minute, but hold that thought if you should wait. Okay. Now, here is the Cromford Market Index. This is a very popular algorithm we use in our industry. And you'll see supply is just about right at balance. 100 constitutes balance. Okay. We're right there where it needs to be. Demand, not so much. The demand is still low. The demand is low because of affordability. The prices are high and rates are high. Okay, so you're not going to have as much demand. That pushes the market index down to 80. So we are below normal. We are at a situation which says, hey, there's more buyers markets in Phoenix and Pinal County and Maricopa than sellers markets.
Exactly. And this number is showing the full Phoenix metro area, right? Each municipality is a little bit different. So if you're thinking of, oh, we're looking to, maybe sell our home in the next year or so, right? It's very specific on which municipality that you're in because there are some municipalities that are technically still in a seller's market based on supply and demand. But this is showing overall Phoenix metro, we are in a buyer's market.
Yep. We had a ton of supply hit the market earlier in the year. And that supply, by the way, has been slowly going down. You can see it under here and underneath the lower left-hand corner. It's slowly going down. So there is some hope and optimism out there. And you'll see that in the data. The data bears it out. We're slowly recovering, as you saw in that last slide. But it's not going to be explosive recovery. It's slowly recovering. Okay. Now, here you go again. Because we had the rates go up, what happens when the rates go up? Well, people kind of tap the brakes a little bit if they're a buyer. Well, that makes it for more of a buyer's market. They
Yep.
have more choices. They can ask for more things, and sellers are giving up more and more. Chase, you do deals all the time. You know
Yeah.
how to negotiate for buyers. You tell them some of the things that sellers are willing to give to make a deal happen.
Yeah, we're seeing a lot. I mean, just overall concessions. We're seeing a lot of concessions being given. We're seeing stuff, if it's not priced aggressively and shown good quality, that, homes are sitting on the market longer, right? And so that's adding to, the supply. The buyers have more options now, right? They're being a little bit more picky on what they want. So we're seeing a lot of that. We're seeing a lot more negotiation power on the buyer side than we have previously, like we talked about 2021. But a lot of concessions being given towards closing costs, a rate buy down. We've had it where, we've been able to negotiate that the lease break fee for a buyer, right, getting out of their rental was covered by the seller. So there's a lot of different things that we're, being creative with and seeing out there.
We've only had about four buyers markets since 19 or since 2000 since 2000. Okay, so people are always asking us, should I wait? And right now, what's happening is when the rates go up, the prices soften even more. So we're seeing some softening in the prices across the valley. So could they go down more? Possibly. Could they flatten out? Possibly. We don't
Yeah.
know. We don't know. All I know is over the course of my career, if we're in a buyer's market, which we've been in for a little while now, it's usually a good time to buy because if you can afford it, right? And that's our job, is to put you with our loan department, and you can determine if you are qualified to buy, right? So I would not just dismiss it because you don't know when the bottom of a market actually is.
Yeah.
You can never time it. So we're definitely in a buyer's market right now, and will be, I'm guessing, throughout the summer. Okay. Now you can see what's happening over the course of the last 25 years. Markets always try to find equilibrium. They try to find the middle, right? Right now, it's trying to find the middle. Supply is going down now, it's recovering. Okay. And then demand is actually not recovering, it's still sluggish, right? So, what's going to get this demand to become more towards the midline, towards the middle? Better rates, right? Better rates is what's probably going to make it happen. And income. And I want to talk about that here in a few minutes too, on one of the reasons why affordability is such an issue in the United States. But before I do that, here's what's going on around the Valley of the Sun. This is crazy. Fountain Hills is still way up, and they've been up for many, many months. Scottsdale's looking real good. These are the Cromford market indexes, the dials we just showed you, and it's a change from the previous month. So Scottsdale and Fountain Hills are up. Chandler down -9%. Gilbert down -7%. I want you guys to see all these negatives here. Okay. There's quite a few. In fact, we've had many that have gone down from sellers markets into the balanced markets. We've had a few go from the balanced down to the buyers markets. Look at Tempe, down 11%, right? So if you've been thinking about buying, you need to pay attention because this could get really good over the summer. It's time to start looking and talking to us now, so we know what you want. If we don't know what you want, we can't go out there and say, "Hey, Johnny, we just walked into a house that's perfect for you." You know what I'm saying,
Yep,
Chase?
yep. We're in and out of homes every single day. So if we know an idea of what you're gonna want once that time is right for you, we can at least keep our eyes peeled and let you know what we come across.
Absolutely. Here's a nice graphic on sellers, buyers markets, and balanced markets. You can see the tide is now shifting. Look at that, 13 municipalities over here in sellers, 13 in the buyers.
Hmm,
It didn't used to be that several months ago. It was heavy over here in the sellers. Now it's evening out. It's going to be interesting. I love these kind of markets because both parties typically have an equal opportunity to
for
negotiate.
sure.
And that's why you hire a professional. That's why you hire us, because we know how to negotiate on your behalf.
Yeah, we're doing it every single day.
Yep. Okay, now when you look at the overall appreciation in the marketplace, if you go way back to June of 2023, essentially we're only looking at like a 2.6 percentage rate of increase since June 23 to now. It's been pretty flat, my friends, right? So, and it might just be flat for a while. And if the prices get a little softer during the summer, you're going to see that continue to be flat. So, it's there, and the only issue I think we have right now is affordability. And we're going to talk about that in a second. Now, this is a great slide. If you're Gen Z, I'm a Gen Xer, and this is saying, hey, look at all the things I can't afford. And I'm not going to minimize it. It's a problem, right? It's like when you look at housing, it's practically tripled when you have the doubling of the sales price and the rates that have increased on top of that. The price of housing is practically tripled since especially COVID, and it is a struggle for people to get into a house. Um, the cost of goods in the grocery store and everything else is so expensive. So I am very, very, my heart is like with people that are struggling to get into a house. But I hope you don't give up, because when you give up, I can tell you right now, when you look at the net worth of somebody that owns a house in their 50s and 60s, it's much higher than people that did not get into housing. So bear with us. I can show you some thoughts here. When you look at the actual rate of increase for median sales price, if you just took a 5% increase since 2000, since the year 2000, essentially we've been tracking at a 4.8% since the year of 2000. And the reason is Phoenix, between the years 2010 and 2020, we were below with the median sales price.
Yeah, and that's what's so interesting because you hear it all the time, right? About how, oh man, we talk about the affordability problem and the home prices and whatnot, and it's just astronomical, right? And it seems just so much higher than it really is. But when you look at the data, everybody talks about, oh, 3 to 5% is kind of what to expect over a long period of time for appreciation, and we're right on track with that. Obviously, the actual median price, took a different route than perfectly up and to the right, like it's shown there. But overall, looking at it, it follows that trend.
Yeah. I mean, look at the last 20 years, Chase. We had two major events. We had the Great Recession, which is essentially right here from
Yeah,
2006 all the way down to 2009. And then 2009 was just another economic catastrophe. And then we had this run up right here because of COVID,
yeah,
right? Two extraordinary events that happened. So we had all this great affordability for years. It jacked up here because of COVID. And now look at it ever since. It's been
yeah.
flat because markets want to find equilibrium. Okay. And this one will too. And I'll tell you how in one more second. So, and again, another pictorial of average annual median sales price versus median income. You can see here's what I've been saying. Okay. Look at the disparity between the income right here that's gradually going up and the housing prices that are going up, right? 455 grand up here, right? And then you have this income that's been slowly going up. Well, what I believe is when this income goes up even more, which is now starting to become, our incomes are now starting to increase. And by the way, we're lucky to live in Phoenix because there's a lot of good companies out there, a lot of good labor. We used to be just a, housing market years and years ago. That's all we really did. We know how to crank out housing. Now we're medical, we're high tech, we're industrial, we're so many different industries in the valley. You know, look at the TSMC plant up Northwest. Look at Intel down here in Chandler. I mean, we still have some huge companies, but now it's much more than just housing.
Yeah.
So when we start seeing these lines down here go up and the income starting to go up, we will see even more sales in Phoenix. That's my take, at least, my friends. And then you can see the what you can expect to pay for a median sales price. So if we're sitting at, let's say, 456 grand right now, and you're paying 20% down, and you're at a 6.5% rate, you're going to be paying about 2781. That's principal and interest, 2781 per month. That's not including taxes and insurance. Okay. We could easily show you what that would be as well. But that's what you're going to pay. Now, some of you may be like, wow, I could actually do that. Well, if you could actually do that, we need to talk because you're going to do a lot better than renting. Okay. So you can see some ideas of what you'd have to pay. Okay. And now we have a couple last slides here. Just a brief note on the west side. It's booming, right? We've got Goodyear, Surprise, Avondale, Glendale, Peoria, all in the top 50 of boom towns in the country. So again, if you're looking for even more affordability, we're more than willing to drive over there and sell you a house. You might have to drive a little bit to work, or but maybe you're a remote employee, right? So there's nothing wrong with looking over there. There's so many deals out there. Don't get fixated on the point that we're at a 6.75% rate. We can get you in at a much lower rate.
No doubt. And that's the thing. It's interesting, either work remote or if you're already on that side of town. I mean, this is pretty huge. I mean, all of those, except for Chandler are on the west side there. So that's very interesting if you already are on that side or don't have a problem going to that side of town, there's a lot of opportunity there. And that again, talking about new builds, there's a lot of new builds going up in that area. So a lot of opportunity there.
Yeah, absolutely. So that is essentially the report, my friends. So if you need our help, right? Together we've got like 40 years of business experience, and we're here for you. Chase and I are here for you. We're hustlers, we're full-timers. We're in this every day,
Yeah.
helping buyers and sellers. Tell them how to get a hold of you, Chase.
My cell is 707-685-7214. Give us a call. We can talk about our VIP buyer program and what we're offering for clients that we work with above and beyond. Or if you're looking, hey, you know what, down the line, we want to kind of have an idea of what our home might be worth. If we do decide to move, upsize, downsize, we're here for you and we strategize.
Yep. And we also handle commercial. We do residential and commercial. Please let us know how we can support you. My number is 602-370-7174. Please give me a shout. I'd love to help you out. Chase and Jeff with eXp Realty. We're here to serve you. Anything else, Chase?
That's it. That was it.
All right. Have a great day, everybody.